What's the latest call right now, Andrew? How do you see the evolution of this call at the House of Morgan Stanley that's been pretty spot on for the last 6 months?
Well, as a portfolio manager, I see the evolution as really the equal-weighted S&P outperforming the cap-weighted, which is namely that, as you know, up through September, the cap-weighted was massively outperforming the equal-weighted. It was massively outperforming the small-cap index, and then something happened, and that is that we're starting to see more of these economically sensitive stocks starting to pick up. So I think the evolution is that it's not so much at the market level as it pertains to cap-weighted S&P. It's more the underpinnings of the rest of the stocks in the index that have really lagged behind. I think they're starting to price some type of reopening, but they did get very overbought on a short-term basis. So things like yesterday doesn't surprise me at all that we had a retrenchment a bit.
Andrew, the goal here is to have some patience. I want you to define the character and color of patience right now. How do you counsel patience, say, out to January or February of next year?
Well, I'm counseling patience through next Tuesday, Tom, which is resist the urge to overreact to whatever happens in the election that doesn't fit your, whatever your, not you, but your political view is. Because, look, I got gray hair. I've been in this business a long time. I've seen so many people react by doing things in their financial portfolio to express their political views that never turn out to be right. So I'm trying to get people just to, look past it. But as it pertains to out to next year, there's a history of re-outbreaks of diseases in the fall after the initial outbreaks in, the winter, spring previous. And you don't get as much of a pullback in the market because it's a known risk. We knew we were going to get another reemergence. And so I don't think from a financial standpoint, it will cause the destruction that we had the first go around. And I do think the market will begin, it's still October, but the market will begin to anticipate that we will get through this at some point, that the comps, this is a very important point, the comparisons for a lot of companies that were shut down this year is going to be very, very easy next year. And the market won't sit around and wait for the reality of that to happen next year. It's going to start to anticipate that as we get later into this year. So I think we get through the election, and it doesn't really matter who's elected. The comparisons are going to be easy for a lot of these companies, and I think that's what people will focus on.
So perhaps 10 minutes ago, Andrew, I might have asked you about what happens if the vaccine isn't exactly as effective as people think, or the virus is spreading more than expected. But that would make me incredibly predictable to Jonathan Ferro, who already predicted I would ask all of those things. So instead, I will ask about, theoretically, if someone were in a triple leveraged cash fund right now, and we're looking theoretically, and we're looking for an entry point, what they should be buying, how they should be arranging their portfolio in equities now for what you're expecting next year.
Well, if you say now, do you mean at this very moment? Look, I can tell you that I trimmed yesterday in our portfolio a couple of financial stocks, not the big banks, but had gone up a lot, right? I trimmed one of our emerging market stocks that had gone up a lot. I think, there's been a lot of risk on since the bottom of this little short-term pullback that happened in September. And a lot of things, to me, look very overbought on a short-term basis. Risk looks overbought. So it doesn't surprise me we got a pullback. And I think that's kind of a short-term play. But I still think, positioning-wise, if we get further pullback, anxiety into the election, what I would say to you, take advantage to get out of that, cash position, because I think it doesn't really matter who's elected. I think the market is heading higher into next year. But again, I'm much more confident in the equal-weighted than the cap-weighted index.
So, Andrew, on November 4th, if we get any kind of negative dislocation, we know that you're a buyer.
Well, again, we knew that COVID reemergence was a known risk. We know that dislocation, that's code for contested election, that's a known risk. We didn't know in 2000 about a contested election. Bush-Gore was an unknown risk of contested election. We had an 8.6% peak to trough down pullback in that unknown risk. So I don't think this known risk, it doesn't mean we can't have a pullback, but I just don't think it's going to be as much because we're all talking about it. So the question is, what are the unknown risks that we're not talking about? What happens if the economy accelerates too fast and the Fed changes policy? What happens if, we have another Fed chair next year? I'm just throwing out things that people aren't talking about. That's what the market tends to react more negatively to.